Welcome back to NTD. Good morning. Next, we're talking about healthy boundaries with your personal finances. When it comes to lending money, say to family or splitting costs with friends.
That's right. We're going to look at how you can protect your relationships as well as your personal financial stability for the long run. And joining us with expert advice is Lawrence Sprung. He's author of Financial Planning Made Personal. He's also the founder of Mitlin Financial.
Good to have you with us this morning, Lawrence. Let's start with this issue itself. How much does it impact people's everyday lives?
Well, listen, money is already one of our biggest stressors, and most Americans say money is a source of stress, and that stress spills over into relationships. And if you're already worried about bills, savings, inflation, adding somebody else's financial burden really is only going to amplify your anxiety. So make sure you're protecting your peace and you're protecting your health, because taking on somebody else's responsibility could be causing more harm for you and for them than it's really worth.
Now, Larry, what are some of the biggest mistakes people make in this area?
Well, I think lending, right? Lending to loved ones is something that we can all really feel alignment with. And, the reality is nearly half of the people who lend money to family or friends say it negatively affects their relationship, and many never even get fully repaid. And so really what starts as generosity can quietly turn into resentment on both sides. So you want to make sure that you either have clear terms if you're going to go into and go down this road, or a clear no can often preserve the relationship better than, moving into that uncomfortable yes.
So how can stepping in to help someone potentially backfire on the person you've actually helped financially?
Yeah, so there's things like, for example, when you talk about support, right? When you want to support somebody, and I've been on a lot of flights lately, and they always tell you to put your mask on, your oxygen mask on first. So you need to take care of your own safety first. The reality is more than 1/3 of adults say they would struggle to cover a $400 emergency expense. If your own foundation isn't solid, how can you think about or afford to take on somebody else's financial risk? And really, you're doing this from a place of generosity, and it should never come at the expense of your own stability.
Now, Lawrence, what should people assess if they're thinking about helping someone out financially?
Well, I think you have to think about certain things. Like one way that we see family members looking to help out other family members, for example, is co-signing. Co-signing a mortgage or co-signing a loan or an automobile loan. And what people fail to realize, they do it with the best intentions, but they fail to realize when they co-sign, they are 100% responsible for that debt. So if the other person, whether it's a friend, family member, or child, misses payments, your own credit takes the hit. And that can simply have detrimental effects in terms of your own credit. And what that will do is cause your interest rates to be impacted in a negative way if you go to borrow. It could impact mortgage approvals, and it could follow you for years. So this isn't about a contract. It's really an emotional thing. You don't want to take out the emotion, because it is a contractual thing that you don't want to put yourself in a bad spot.
Do you have any tips then for navigating relationships in sticky situations, like, for example, how to say no clearly or how to potentially try to be paid back?
That's a great question, and we get asked that often. And a lot of times we, as the family's advisor, and if you have your own advisor, it may be an easy way to say no and blame it on them. And we've taken the hit on this in several instances where a family member calls us up, has a conversation with us. They're looking to lend and assist a family member financially. And we talk to them about it and show them the ways that they're impacting their own situation and putting themselves at risk. And ultimately, we feel completely comfortable having them tell the family member or friend that they've consulted with their financial advisor and they've been advised that this is not a good thing for them to move forward with and could do more harm than good to them financially, and then also keeping in mind the potential risk to the relationship. So you can find an out that way. And if your advisor like us is willing to take the hit on that, it could be a great way to have that conversation.
And Lawrence, how common is this conversation with most families?
Yeah, it happens quite a bit. And I can share a story with you that, one of the unintended consequences, we had a parent call us that was looking to assist their daughter in buying a home, and they wanted to give them a lump sum of money to assist them. And quite frankly, it was not a situation where the person really could afford to do it. And when we started talking to them about their daughter and asking them, well, if you didn't give them this money, would they be able to buy the home? Because they really wanted to help them out and really, more or less do a good thing for them. And they said, no, they wouldn't be able to afford this home without this help. And I said, well, what's going to happen when their kids are going to school and they need to buy clothes that they're not used to buying? If they're shopping, for example, at Walmart and the rest of the folks in the neighborhood are shopping at Abercrombie and Fitch, maybe we're setting them up for a lifestyle they can't afford. So maybe this help is actually doing more harm than good. Ultimately, they ended up just helping with some furniture for their new home and not helping with that specific home. But it happens quite a bit.
And just lastly, Lawrence, if there is a checklist you've got for this and all of those items can be checked off to make it a healthy offer, what would those be? Those items on the checklist?
So you want to have clear terms and conditions, have potentially an interest rate at market level if, to make it worthwhile, to make them feel comfortable, have a monthly payment, make sure that they're taking on some level of responsibility, that you're not providing this money with no strings attached. So I would say have clear terms, have clear expectations. I am providing you with this money, and these are the terms and conditions that I expect it to be paid back at, whether that's monthly or semi-annually, but give them a payment schedule and make them stick to it. If you're going to go down this route, you need to have this as contractually laid out as possible, just so all the expectations are laid out on both sides of the equation, and hopefully it will allow you to keep that relationship intact.
That's what it's all about. All in writing, sounds like. Thanks so much, Lawrence Sprung. Good to speak with you.
Thank you.